Stop what you're doing. Seriously, if you own any mining stocks, you need to put down whatever you're holding and pay attention to this fundamental breakdown. Welcome to The Explainer. Today, we're diving deep into NOVAGOLD and their massive Donlin Gold project. And I promise you, the scale of this thing is wild. Let's get right into it.
I want to drop a massive number on you right out of the gate. $24 billion. Yep, billion with a B. Based on their recent earnings call, if gold prices keep pushing toward the upper end of their models, the net present value of this Donlin project, at a 5% discount rate, gets incredibly close to a mind-blowing $24 billion. That's the kind of math that literally forces Wall Street to sit up and take notice.
So that brings us to a pretty massive question. Is this the ultimate gold leverage play in the market right now? Look, when gold runs, miners are supposed to be leveraged proxies. But we all know not all projects are created equal, right? Some can barely make a dime even in a raging bull market. But others, they operate like heavily compressed coiled springs. To see if Donlin is that coiled spring, we have to look at the actual dirt.
And here is the contrarian reality of the mining industry today. While most global miners are out there practically starving, dealing with rapidly declining ore grades across the board, Donlin is sitting on an absolute feast. Their resource grade is 2.22 grams of gold per ton. That is literally more than double the industry average, which is sitting at less than 1.11. And you know how this works. In mining, grade is king. It drives processing efficiency and ultimately your profit margins.
Now, I know what you're thinking. The biggest fear we all have when looking at development stage miners is simple. Are they just going to run out of cash and dilute my shares to zero before they even dig the hole? It's a completely valid fear. But let's check the balance sheet. NOVAGOLD just closed an upsized bought deal private placement, pulling in about $294 million. That pushed their total treasury, cash and term deposits, to roughly $393 million by the end of Q1 2026. So they are heavily funded for the road ahead.
So here's the setup. World-class grade, massive scale, and a literal fortress of a balance sheet. Stick with me because by the end of this explainer, you're going to see exactly why Wall Street analysts have unanimously slapped a nearly 78% upside target on this stock.
Section 1. Unpacking the Donlin asset.
As you can see, engineers are already mapping out the expansive project layout. This asset is located in Alaska, which is a fantastic, safe North American mining jurisdiction. The project hosts roughly 40 million ounces of measured and indicated mineral resources. Just to put that into perspective for a second, finding a 5 million ounce deposit today is a massive win. Donlin has 40 million, and it's all sitting along a gigantic 8-kilometer mineralized trend.
Now, what's really fascinating is the sheer production profile a proposed open pit of this scale can actually generate. Get this, the mine is designed to average over 1 million ounces of gold production per year over a 30-year mine life. Just let that sink in. A 30-year operational life. In its first decade alone, it's projected to peak at 1.3 million ounces annually. Production scale like that puts Donlin in a completely different, incredibly rare class of global gold assets.
And remember that exceptionally high 2.22 grams per ton grade we talked about? Well, that translates straight to the bottom line. Estimated operating costs are projected to be less than $1,000 an ounce. So when you combine top-tier production volumes with sub-$1,000 operating costs in today's gold market, yeah, the cash flow potential becomes absolutely staggering.
But wait, it actually gets bigger. You see those drill core boxes? They represent some major potential. That 40 million ounce resource we just raved about, it actually covers less than 5% of their broader land package. The known resources mostly sit in just a 3-kilometer section of that 8-kilometer trend, which means they have tremendous district-wide exploration upside right in their own backyard, both along the strike and deep underground.
Section 2. Project Catalysts and Timeline.
So how do we actually get this gold out of the ground? The actionable path is already in motion. In the first quarter of 2026, Donlin selected Fluor Corporation as the lead engineering firm to advance the Bankable Feasibility Study, or BFS. This is absolutely crucial. It's the highly detailed economic blueprint the major lenders need to see. They plan to finish the BFS and start detailed engineering in 2027, and that unlocks their major construction window, which is targeted right between 2027 and 2031.
And they're not just sitting on their hands waiting. To hit those targets, they've already awarded key strategic engineering contracts to heavily de-risk the technical stuff. WSP is on board for the on-site power plant. Worley is tackling the natural gas pipeline, and keep in mind they just signed a letter of intent to look at natural gas supply from the Alaska LNG project. Hatch is taking care of the pressure oxidation circuit and oxygen plant. Essentially, they are bringing in the absolute heavy hitters to make sure the technical foundation is flawless. Section 3.
ESG and community stewardship.
If you look at their 2025 sustainability report, active stewardship on the ground and in the air is a massive priority. And their safety and environmental track record, it's exactly what you want to see. We're talking 0 fatalities, 0 lost time incidents, 0 hazardous material spills to water, and 0 spills of 10 gallons or more to land. They are operating incredibly safely in a very pristine, complex environment.
Plus, the project's integration with the local indigenous communities is totally foundational. This land is stewarded by the Central Yupik and Athabascan peoples, and Donlin is delivering real, tangible economic partnership. 53% of their direct hires are shareholders of local native corporations Callista and TKC. They've used 894 Alaska-based suppliers and poured over $4.1 million into community initiatives. And they've done all of this with 0 community or human rights incidents. Guys, this is exactly how you secure and maintain a true social license to operate.
Section 4. Financial health and leverage. Okay, let's get back to the math, because the leverage here is where things get truly crazy. Check out how the net present value, the NPV, at a 5% discount rate scales with the price of gold. At a super conservative $1,680 gold, the NPV is $1.2 billion. But push that to $2,100 and it spikes to over $5 billion. Push it to $2,730, the NPV explodes past $10.2 billion. And like the CEO mentioned in early 2026, with gold pushing even higher today, internal models show that NPV stretching toward that mind-bending $24 billion mark we talked about at the start.
But look, we have to be smart about this and understand the downside risk too. The project requires a gold price of roughly $1,554 per ounce to break even on a 5% discounted basis. Given where gold has been trading lately, that offers a really healthy, highly competitive buffer. Basically, it's a project designed to easily survive the downturns, but just absolutely print cash during a bull market.
Section 5. Analyst forecasts and verdict. The current institutional consensus on this is just remarkably uniform. Out of the analysts actively covering NOVAGOLD stock right now, it is heavily skewed upward. 60% rated a strong buy and 40% rated a buy. Let me repeat that. There are exactly 0 hold, sell, or strong sell ratings. It is a completely unanimous bullish outlook from Wall Street.
So what does that actually mean for the price target? Well, analysts have set a consensus target of $13.26. If you compare that to the market close of $7.33 from the forecast data, you're looking at a potential upside of nearly 78%. Why? Because they see the $393 million treasury. They see the 40 million ounces of high-grade gold, and they see that extreme leverage to rising gold prices.
So, we loop right back to our opening question. With a rock-solid treasury, a bankable feasibility study actively in motion, and 40 million ounces of gold sitting in a premier, safe jurisdiction with decades of exploration upside left, is this the ultimate leverage play you've been waiting for? It's an absolutely fascinating setup, and honestly, the numbers speak for themselves. Let me know what you think in the comments below, and definitely keep digging into the data yourself. Thanks for hanging out with me on The Explainer, and I'll catch you in the next one.